What's going on, guys? It's Dylan there. Today, we'll be going over a ticker symbol analysis on the ticker symbol UNH. We have seen UNH gap down multiple times, starting from the peak of $600, ripping down, testing the support zone, right, sinking beneath it, testing it, and rejecting, leading into a gap down into another. Stock price is getting very, very tight at this level, seeing a lot of bullish influence. With that being said, though, guys, remain unbiased throughout the entire video. Again, actual price prediction, levels to watch, and much more, guys. Let's get straight into the analysis. On the weekly time frame of UNH, guys, we have seen a multi-year range broken to the downside. Moving back all the way since 2022, this range has been established, previously been resistance for a couple of weeks, right? Buyers getting this level before sellers accumulate. And we go back and forth for a very, very long time, guys, right? Coming up, coming down, ultimately just being in a range, not much going on. Buyers accumulating within these lows and sellers looking for positions. Before we have entered this, descending range wedge-like formation, breaking to the upside, getting that nice liquidity before getting some top outs, kind of getting nasty in this area, getting yanked down, trying to use it as support, but ultimately failing. Now that support turned resistance once again, accumulate these highs, we knife down, get that bounce in support once again, rise up, and we break this channel, guys. At this time and moment, everything looks good. We see the massive wide bar. Exiting this range, like the nicest liquidity we've seen out the range the whole time. It should be the breakout level, but flip it to the daily, guys, we of course gap down. So that changes a lot, right? When we did gap down, you've seen the reaction. We tried to use it as support for around a week, seeing a baby wick, but ultimately we knifed right through that. Looking on the weekly time frame, what's staring at us right in the face, guys, the elephant in the room, is the potential red to green reversal. This is such a simple technical analysis 101 technique, but it does offer a lot of upside and downside potential, whatever you're looking at, whether it's green to red or red to green. So within this scenario, we have knife down from the highs being 56%, which will give more upside potential if we see this pattern play out. Being that we have 1, 2, 3, 4, 5, 6 red candles in a row, followed by two very, very nice candles, which is a hammer and a doji, forming indecision within the last day, right? But more or less, it is nice. Seeing buyers step back in, guys, having an incredible night to the downside. Just think about it. Would you want to short, this candle, this candle, or would you want to short when stock's down 55%, extremely to the downside? We finally see some reminiscence of a wick and buyers stepping in, being that we're seeing these green candles. So that's really the simple psychology, guys, of a red to green reversal. And I think we definitely have the potential, if we can close over the high, really being 307, not quite the high, but if we can start to curl up, guys, you could easily see that beautiful red to green reversal. So looking on the weekly time frame, it does not take a genius to say that we're way overextended to the downside. And that's really the main thing we're looking at, guys. Although we definitely are moving down, and once we start to curl up, if we do, and knife back down, that's when we have to worry about the buyer presence. But as of now, guys, you got to think, what is in it for the sellers? This would be the great opportunity to exit your short position, and this would be a great position to dollar cost average in a long-term investment, right? And or if you're a trader to make a quick buck off a red to green reversal, right? And we do this nice daily tenant structure we will get to, guys. But the main thing we're getting out of this weekly, guys, is there's just a whole lot more room to the upside than the down. So although we are working in a very, very nasty direction, it does not take a genius to tell you that. We definitely are seeing early signs of that red to green reversal and potential upside. So we do definitely remain bullish on UNH weekly time frame over the next 1, 2, 3, 4 weeks in the short term. We definitely would expect more upside, as it only makes sense, and that's what every single technical indication is leaning to. With that being said, if we do take out these lows, these very, very obvious lows of these candles, we would be moving lower, but you got to wonder, what's really in it? If the buyers squeezed up, you could move all the way right to fill this gap or this gap. But if it does squeeze to the downside, there's really not much room. This is where you target if you're a seller down at this wick. So definitely just, simple psychology, simple technical analysis. Let's keep it basic when it is basic. We're seeing a red to green reversal attempting to bounce. Looking on the daily time frame, guys, you see that nice perspective of when we did gap down and knife through the support. Buyers did try to step in, and claim that support level, get right back in that weekly range we mentioned, guys. But it was short-lived. We rejected once, twice, getting a red bar, and from that angle, we completely flipped downwards. When we descended downwards, we had this very, very obvious descending resistance marker, which shows a lot of weakness, leading into another gap down, and once again, another before is a little bit too much too soon. And this is when we have seen buyers step back into the market, guys. When you look at the psychology of these candlesticks, they're nice, strong, big bars. Stock is consolidating, right? We get one, two, red-based candles, more or less consolidation, and we flip green. We start to move up a little bit higher, reject off that top of the trend line with not a lot of resistance. So we're not seeing a lot of pushback from the sellers over the last, say, 1, 2, 3, 4, 5, 6, 7, yeah, about 15 candles or so. So not a lot of seller pressure to be had. And seeing this descending resistance marker match up right at the end of the apex. Look how tight this structure has gotten, guys. And we've had that perfect decline in volume, which is what you're looking for in these kind of, setup formations, as that lets you know there's a calm before the storm. If we see volume confirm to the upside with a breakout, it's almost a given, guys, that we will come up and get to that first price target of that $342 level, guys, as that was the first major gap down, and we set a wick right at that area. Within these very big gap down setups, we almost always see traders waiting in these areas to get some risk to reward. Think about it, guys. Say the stock price does start to surge, where will long-term sellers want to get back in? Right here, because they can set their stop loss right over these highs, have a very low RR, and potentially catch the trend fading once again. So, we haven't seen enough out of UNH as of now to say that this structure will lead us all the way to that gap fill, which ultimately could happen, but let's take it one step at a time, guys. We do think that if we see that upside over this rough confluence zone on the daily, being that rough box, we had a ton of touch points, roughly around that, $305 level. If you want to be safe, 306, 307. But if we confirm to the upside, should be a pretty easy movement through there. You could argue taking the range to the top to the bottom. Maybe we do have the energy to retest that, and that perfectly does line up. Wouldn't shock me, guys, but that'll take some time. As of now, we do think definitely bullish on the daily, guys. Just seeing how beat down this thing is, seeing this descending resistance marker line up perfectly amongst the apex for their top energy build. Every single one of these sellers that have, got in these areas, they got in over here. They're getting in over here. They're going to be exited from their position, and new buyers will emerge in the market, as this is where long-term investors and traders like to step in as, hey, look at the weekly, guys. They're getting a crazy dip, right? Long-term investors like that, and traders love these volatility moments, guys. So looking on the daily, if we do confirm to the downside and break this red candle low, being that, let's mark that up, 295. If we break 295, you would argue that this structure will move to the downside, effectively being a bearish pennant. But guys, all the other signs on the technical, perspective definitely lean this structure will lean to the upside. So looking at the daily, we do acknowledge that this pennant may break to the downside, but there's a higher probability we see that green nice bar breaking up out of that, leading into 342, moving into the next week or two. So we definitely remain bullish on the daily time frame, guys. Don't get faked out on these, because we have seen a lot of confluence in this red box, which I accidentally just deleted. We'll redraw that. So preferably we wait till we get the break of the top of this. But looking at the daily, guys, it definitely looks very nice, and we feel good about the short-term aspects of UNH. Looking on the hourly, we do see a very nice attempt by the buyers in this max pain moment. We gap down, sink down dramatically, right? We gap down, you got to think, are we going to sink back down dramatically? Well, nope. See a nice attempt by the buyers, rushing market back up with virtually zero pullbacks until we do gap down, guys. If sellers are going to step back in the market, it's going to be after, a bit of a false breakout or a false bounce, whatever you want to say. But immediately we enter this kind of, descending channel. We get the upside until ultimately consolidation. And that's what we're seeing as of now, guys. It's really the main thing we're looking at on the hourly. Seeing how tight candles have gotten, we definitely know that the next movement should be a massive one, especially if we squeeze to the upside. Once again, guys, just jumping back to the daily, I do think it's appropriate. Would you want to short right here, Where do you want to approach when buyers are finally getting back in the market after a 55% negative retracement to the downside, seeing bullish divergence and volume descent right in the apex? I think it's pretty obvious, guys. Doesn't take a technical genius to tell you that, right? It's so, looking at the hourly, we are most definitely unbiased on the channel. And, there's a possibility that we do come down and test 295 and get that movement to the downside. But it is a whole lot more likely that we do see the upside movement as buyers are clearly in control, as we see here, guys, right? We gap down from that. We immediately enter extremely tight consolidation. So with that being said, guys, we don't have to overanalyze the hourly. A lot of it does retract back down to the daily. Quite a simple analysis on UNH, seeing that incredible overextension to the downside, seeing a potential red to green reversal on the weekly, seeing two perfectly bullish hammer candles and a doji printed at this level. You got to wonder, is that red to green reversal finally gonna happen? If you found any value, guys, consider liking and subscribing for more non-biased technical analysis breakdowns. That being said, have a good day. Take care, trade smart, and peace.